Welcome to Unsuitable on Ray Radio, the award-winning financial services and business advisory podcast that challenges your old-school business practices and the traditional business suit culture. Our guests are industry professionals and experts who will challenge you to think beyond the suit and tie while offering you meaningful modern solutions to help you enhance your company's growth. I'm your host, Dave Kane.
Now that it's November, I'm going to start harping on the importance of year-end business and tax planning and thus avoiding surprise tax liabilities come April 15th. I know you hear your CPAs talk about this stuff all the time, but it's only because we hate surprises. Not only will good bookkeeping habits save you tons of time in the long run, you might find that you actually save some money along the way. But don't take my word for it. Amy Smith, Ray's bookkeeping specialist and trainer, along with being a QuickBooks guru, is back to talk about what you actually stand to gain when you get your books and financial statements in order. Welcome back to Unsuitable, Amy.
Hey, Dave. It's great to be back. And
Good.
I've made it here a year. And
Perfect. You know, I hated to interrupt you guys there while you were taking a selfie. We got a podcast to do. And,
I'm sorry, I'm becoming just as famous as you.
you know,
I have goals, you know.
You do have goals. And I've seen your goals, and they're wonderful.
Thanks.
And, congratulations on meeting those goals. You know, the last time you visited with us, we talked about bookkeeping issues that maybe needed to be buttoned up, along with increase in tattoos in the business. You remember that discussion?
And I haven't gotten any new tattoos either. Sorry to disappoint
Okay,
you.
well, that's no problem.
That wasn't a goal.
So, not for 2018, maybe 19 and beyond.
No, maybe.
So, before we get into the nuts and bolts of the discussion, I want to talk about your QuickBooks designations. All these designations you have. What exactly is your title in the QuickBooks world?
Actually, I'm just an average certified pro advisor. I used to hold the title of advanced, but I kind of let that go when I took a brief hiatus from public accounting. And they've actually done away with that program. So I don't like to think of myself as an expert or a guru. I'm just somebody that uses the system to its fullest. And 20 years of experience, I should know something.
Your colleagues in Ray's Zanesville office just refer to you as, she's just damn good at QuickBooks. That's your being famous.
And you know what? I'm so down home and down to earth. That's what I like. I don't like it because when someone says you're an expert, it sets the bar so high. I don't have the answers to everything, but I have resources, and I use those resources to the fullest.
And you
I
can
don't
go
know
for
it all. That's right.
And you're also a trainer, and we'll talk a little bit about that as the podcast moves on. But the one thing that stuck with me the last time we got together is you also have a family business.
Yes.
And you use QuickBooks with the inventory module within QuickBooks. So, I mean, you know all the issues that can come up with QuickBooks. So,
right.
So not only do you teach it, you help clients with it, but you use it in your own personal life and your own personal business.
It's amazing. I think of how one software has changed my life.
Yes.
In our family business, my career, and the way that I help others.
So that's what we're here today, is to grab some of that knowledge that's floating around and the experience that you have.
Grab something, Dave, and hang on tight.
Yeah, there we go, Gonna lead off. Hey, let's kick it into it's fourth quarter. It's go time. We got to get those books going.
That's right.
Is it too late to?
It's never
start?
too late. It's fourth quarter is the prime opportunity. It's taking advantage of tax planning. I feel like I've been doing nothing but harping on that for like the last 2 months.
Every time I talk to you, you harp to me about that, among other things. You're just a good harper.
I know. I know. Well, I think it comes from being a woman, doesn't it? But we won't go there.
That's one of the things I'm not allowed to talk about in my contract.
Yeah.
Just stick to QuickBooks, would you?
Okay. But no, the advantage of what you can gain from tax planning is huge. Being a small business owner, and working with, being in small business all my life, I understand, especially from a retirement aspect of it, a lot of small business owners, they don't think about retiring. All they're thinking about is what's hitting them right now in the face. It's what's happening today or what's tomorrow. And they're not thinking about 25 or 30 years down the road when their bodies are old, they're tired, and they want to sell the business. Ooh, not allowed to hit.
Not allowed to hit. Yeah, stop. Don't pick the mic up just yet.
Okay, sorry.
Wait till the music starts.
But taking advantage of tax planning coupled with utilizing retirement planning as a benefit to offset tax. I work with small business owners, and they all usually think tax is bad. But tax is actually good from the standpoint is if you're paying tax, you're making money.
Making a little money.
That's right.
Yeah. I made a note. I did want to ask you about this. Bookkeeping to me seems to be, a lost art. There's some really, really good bookkeepers out there that really are just fantastic. But there's some very, very average bookkeeping going on out there that maybe just don't know how to use the program, but there's some very average bookkeeping. Are you seeing that, or is that just me being me?
It's you being you, Dave. It's okay. What you find is that in most businesses, the bookkeepers were thrown into that position. They were never properly trained. They were never properly schooled. And they have the ability to learn. They just need the resources to do that. And that's one of the things that I love is when I'm working with a new bookkeeper that's been doing it the same way year after year and doesn't know any different, but then when she gets that moment when she realizes this is why I'm doing this. If I do this the right way, then I get this report.
Yeah.
And so that's, like I said, I've had 3 instances this year where small businesses have lost their bookkeepers. And all 3 of them were, unfortunately, as a result of their deaths. And the impact that they had, whether they were doing it right or wrong.
Just their ability to know what's going on.
Right.
So, as we have many business owners listen to our podcast, maybe as a comment to the business owners that maybe they need to have some coaching and mentoring sessions, some training sessions lined up in the budget, for their bookkeeping group or their accounting department. Right. A lot of times we think of that group is so important. Sometimes they get lost out on some of the mentoring and coaching and training. That's
true. And I tell a lot of the people that I train, or as a few of the people in the office call them, Amy's groupies, I tell them, YouTube. YouTube is a great resource. I even use YouTube when I'm doing something.
You're telling those dirty secrets again, aren't you?
I know, but my oldest son remodeled an apartment learning how to do it on YouTube videos. And if I get into a jam and I don't know something or I'm trying something new, I'll go to YouTube. There's all kinds of videos out there on how to use QuickBooks or how bookkeeping basics.
So yeah, I think that's an excellent tip, excellent training tip. They could call you and the clock starts, or they can research it a little bit and then get your professional opinion on
They
some
just
things.
have to have the will and the want.
Okay. Hey, let's get this fourth quarter planning in gear. When is it too late? January 2nd of 2019,
yeah,
pretty late.
It's definitely late
Last
at that
week
point.
of December, too late.
Not really.
Well, nobody's around. Nobody's thinking of that.
Chad's usually around at that point, helping. We're usually, it's not. And I guess, the first thing is from an accounting standpoint, I'm going to tell you the traditional rule would be just, looking at your balance sheet, making sure your cash is balanced. If we get an account and we know that all the data in the data file, all the accounts were reconciled, we know all the data's in there. It may not be necessarily in the right spot, but we know the data's in there. And that is probably the first huge step. Instead of leaving a whole file drawer full of bank receipts, but we don't know anybody in this room that does that, or bank statements. But that's the first step. Making sure your loan balances are accurate, making sure that, the interest was posted correctly to interest expense and the balances are correct, making sure credit cards were processed correctly. And I'm talking about credit cards they use in their business.
Right.
Are the expenses hitting? Did they only post the payments? If they only posted the payments, they're missing a huge chunk of deductions.
So I think the message, just like at home, I got to read your mind. I don't know exactly what you just told me, but I think you said, hey, don't get behind. Let's stay current each and every week, each and every month, each and every quarter. Don't get behind.
Right, and it's hard. It's hard to keep. I get that. I'm juggling lots of plates right now, and I'm doing my best to keep my head above water. But I have clients that we do monthly closes on. And they look forward to that, coming into that first week of the following month, because they know that their books are accurate. They know they're right. The other thing is making sure your payroll's right, making sure you have your employee information correct. Another big huge thing is 1099s. Making sure that you've sent out W-9s and you've requested EIN numbers for these.
You can start doing that right now.
Yeah, exactly.
Instead of waiting until those things come due pretty fast after year-end closes.
Especially if you're working with an accounting firm or a bookkeeper, their January is a bookkeeper's nightmare month. It is, especially if they're doing payroll and they're doing 1099s. They're just, I don't want to use the phrase balls to the wall, but
you're going to use that phrase.
I'm going to use that phrase.
That's all right. They'll cut that out. That's okay.
Good,
that's all right. They got that out.
But they're just
don't sneeze.
Okay, yeah, they won't make it a wet spot. Anyways.
So to go back these 1099s, December is a good month to start doing that.
That's right. It is. I have actually, all of my clients, I have them working on that. When I work with clients, I give them a homework list. So if it's clients that I usually see on a monthly basis, they know that they have homework that they need to get, because I make them do the legwork.
Okay.
I'm there to train them. I'm there to, I'm there for support, but at the end of the day, I need them to be able to do it. That way I can service more clients.
Okay. As a business owner, the byproduct, the big idea at the end of the rainbow, the big pot of gold is I'm going to sell the company.
Exactly.
And somebody's going to come and do some due diligence, and if they find that the books are not in order, I've just discounted my business whether I know it or not.
Yeah, it's true. Especially, I hate to say this, and I hate to pick on small business owners, but a lot of small business owners, especially if they're a cash-based business, and when I'm talking cash-based, let's say a laundromat or a rental property company or
and the list goes on, right?
Yeah,
sure.
The list goes on. They have a tendency where they will, I don't want to say this, but pocket the cash. Well, then at the end of the day, when they go to sell their business, they can't prove their net worth of the business. So in the end, they're really cheating themselves.
Yeah, for short-term gain.
Right.
Impacting some long-term ability there.
Right.
You'd mentioned various accounting methods, and certainly if we have accurate data within the system, there are some new rules that are very advantageous to small business as far as certain accounting methods that can be used for your tax return.
Correct.
And again, we both know if that file, that trial balance is wrong, those statements are wrong, we can't make a educated decision.
Yeah, and it's, in my line of work and what I do with inside of Ray, and I said it yesterday, most of the new clients that I work with, they're a disaster. And that's why I'm there. I'm there to make sense of it all. I'm there to help them develop processes. I'm there to help them develop procedures. I'm there to help them clean up the balance sheet. I'm there to educate them.
Well, that's a very insightful comment. And if you think about that and dig a little deeper, the business owner, they were never trained in accounting and bookkeeping. And, for the most part, we don't want them doing the accounting and bookkeeping. One, it doesn't get done.
Right.
And second, it's not correct. We want them out talking to customers, talking to clients, looking at processes, ways to make more money, not the accounting. It's your job to help them get the books together and read those reports.
Yeah, and that's true. And it's, I use this kind of I don't even know what to even call it, but
You're making stuff up again?
yeah, I am.
You didn't bring notes to the, you didn't bring notes to the
don't.
podcast.
I am the fly by the seat of your pants.
There'll be a
girl.
disclaimer at the end of this report that everybody can hear.
Okay. Well, I gave a presentation a few months ago to a group of nonprofit. The majority of them were artists.
Okay.
And I told them, I said, because they're of course, my first question was who wanted to grow up to be an accountant or a bookkeeper, and of course none of them raised their hands. I was shocked, and I said, you've got to think of it like this. I said, do you like to listen to music? And of course they all said yes. I said, so you like to write songs, you like to look at art, you like to walk through a sculpture garden. I said, that's really no different than your accounting books, because they all tell a story. And at the end of the day, your books tell a story. And they all looked at me and they were just totally amazed. But that made sense to them. So being able to relate all this on a level that the business owner can understand, that's probably the most important thing that we can do as accountants.
We got to relate to their business. We got to understand their business.
Exactly.
And that's what you do well. That's what you've been able to bring to the table with your clients. That's your goals.
I think so. It's just that, yeah.
All right, let's get a jump on tax season. Let's just go through, check some things off. I've got a list. You've got a list. We got stuff floating around. Let's just go through them.
Okay.
Let's just go through them.
All right.
All right. You give me one. I'll give you one. Year end. What are we doing?
Bank recs.
Bank recs. Okay. Is it my turn?
Yep.
All right. Loan balances have to be correct. It's your turn.
Credit cards have to be balanced, and all the expenses need to be posted.
My turn?
Yep.
Okay, we have to have actually receipts for those credit cards in our files to support that deduction. Just because you reconciled the credit card, I might lose a deduction. Okay,
Correct.
Your turn.
Fixed assets, making sure that nothing was accidentally posted, like a $30 charge to equipment. Looking at previous year, comparing, making sure that everything's posted correctly. I guess that was 2 for me, so you get 2 now.
My list is getting shorter and shorter. Hey, I'm going to compare. I'm going to do some analytical review. I'm going to compare this year's balance to last year's balance. Oh, wait a minute. Last year's balance was totally messed up. How am I going to do that?
Unfortunately, depending upon what type of company you're going to have to probably look at their balance sheet off their tax return. Sorry.
Back to me?
Back to you.
All right. You said something this depreciation thing. Do I need to make... I'm going to make some new purchases for the end of the year. I want to buy a fast car. I want to buy a pickup. Let's go. Let's get it.
I have a client that has a race car, and he thinks he can write everything off to advertising.
Do you let him do that?
No, I don't.
Okay. Boy, you're pretty strict. Loan renewals. You know what? I got a line of credit with the bank. I got to make sure my financials are ready to go. The turn of the year. Got to be ready to go. I got a loan that needs renewal.
You got to have your all of that done. Yes.
Okay. You run out of stuff, huh?
No, there's all.
I've been doing
kinds
this a
of
long time. I think I can out. I think I can. I think I can go on.
Oh, I got a good one. Good one. Comparing vendor expenses. Looking for. I don't believe in the term fixed expenses. I think things can be negotiated. So I like having my clients review their expenses from their vendors, seeing if their costs have gone up.
Okay. My turn. You ready for one?
I'm ready. Come on, bring it on.
All right. Leases. We got to look at those leases because leases can be treated differently for financial statements and tax returns and depreciation. You didn't think I knew that, did you?
Gosh, Big Dave here. I've got one too.
Oh, you got one. All right.
I got one. Looking at AR, looking at
what's AR?
Accounts receivable, the money that people owe you. Looking to see if you have any old outstanding debts, picking up the phone and calling them and find out why they're not paying their debts. Maybe they're not happy with your services. You need to be asking those questions because there's a reason.
I got one.
Okay.
The Wayfair case. We need more account in your face. That's a good one.
You
would not have gotten that one. You would not have gotten that one.
I was thinking of that when you talked about purchasing equipment. Because do you know how many contractors go out of state and they purchase equipment and do not pay sales tax on it? And you go and you ask them about use tax. I'm going to use
my
tax.
idea.
I'm sorry, but it it's pick a spaghetti string. There's lots of
There's a lot going on. Huh?
There's a lot going on.
You'd mentioned contractors, though, depending on how they report to the bank.
Yes.
Or their bonding agent and the IRS, there may be some contractor schedules that need
Work
to be.
in progress.
There you go. We'll take that one as a joint.
Okay. We'll take that as a joint.
And I think we have have heard a podcast in the past from Chris Haxine regarding some new tax law changes for entertainment costs.
Yes.
And again, I think the QuickBooks has to handle that. So
Yeah.
I think that little exercise we went through, I think is very, very helpful of some of the key issues that need to be addressed now
Right.
and towards the end of the year.
That's right.
So anything we missed?
Oh gosh, everything.
So, and you got to plan that Christmas party, don't you?
Yeah.
For your client.
Okay. Yeah. All over it.
So, our guest today has been Amy Smith from Ray & Associates, located in Zanesville, Ohio, but travels throughout, I would say, southeastern Ohio, central Ohio.
I would say pretty much Eastern Ohio.
But you bring a good point for our clients who are traveling. How are we going to track our mileage and travel expense in QuickBooks? Got any quick ideas? We'll run out of time. You got to go. You got to go with it.
QuickBooks actually has a mileage tracker in it. So depending upon if you're using desktop or online, you can actually, the online version has a app, I believe, that you can get. So, yeah.
Perfect. Thanks again for joining us, Amy. You made some really great points about the impact a clean books can have on your business. Thanks for sharing your expertise, and there's no time like tomorrow to get started on this.
That's right. We still have time. And,
you got it.
It's like weight loss. The new year is upon us.
Got to go. Listeners, Amy is always offering a seminar or workshop on QuickBooks, and to boot, she's got a personality that goes with that training. I think you'll enjoy listening and training. Be money well spent. Follow Ray on Facebook to stay up to date on upcoming events. Amy also likes to post videos on our page, so while you're out there, be sure to check those out. You can also learn more about Amy, our services, and get a ton of great information on our website at raycpa.com. Until next time, I'm Dave Kane, encouraging you to loosen up your tie and think outside the box.